everything is bad. Blame the tax code. Washington, if there's one thing Americans of all political parties can agree on, it's that taxes stink. But if there's another thing they can agree on, it's that they hate those jerks who don't pay their fair share of taxes. This paradox is at the heart of the feckless, fruitless debate over tax reform and nearly all of the pathologies of politics in 2017. Everyone loves to hate our loophole-riddled tax system. But politicians will never truly give it up. Special tax treatment is a crucial way for them to maintain and disguise their power. The result is a tax bill from House Republicans that is months late, has something to infuriate nearly everyone, and barely even pretends to offer the long-promised simplification of the tax code. In the background of the legislative negotiations is our current tax system, which is powered by guilt, fear and constant low-level lawbreaking. The former Trump campaign manager Paul Manafort has been charged with filing fraudulent tax returns and failing to report offshore accounts in an attempt to illegally reduce his tax bill. Tim Cook of Apple and his fellow chief executives regularly get called up to Capitol Hill for tongue lashings over their legal strategies to minimize their company's tax burden by keeping overseas profits overseas. And don't get too smug, you deducted that home office on last year's return, when we both know it's really your bedroom. All of this glorious dysfunction is made possible by the complexity of the tax code. The United States has one of the highest corporate tax rates among the world's major economies and a relatively high effective individual tax rate. But where things get dicey is the enormous number of incentives, credits, thresholds and exceptions. Benefits go to corporations. What exactly is accelerated depreciation? The rich, enjoying the low tax rate on those long-term capital gains, the middle class, hello, mortgage interest rate deduction, and the poor, nice to see you, earned income tax credit. They favor the fertile, child tax credit, and the dead, trusts and estates. They go to the urban and suburban, state and local income tax deduction, and the rural, farm fuel tax credit. Every one of those policies could legitimately be called a loophole, but most people tend to reserve that word for special tax treatment they don't like. Everyone wants a fair tax system. But like children in the schoolyard, we have definitions of what's fair that vary widely and are typically transparently self-serving. Mitt Romney arguably lost the presidency by disparaging the 47% of Americans who pay no federal income tax at a fancy dinner, while Bernie Sanders couldn't stop hollering about the obligation of American corporations to repatriate their overseas profits. They both wanted a fair tax system that furthered their policy goals. It's not at all clear either of them actually wanted a simpler tax system. Taxes are the viscera of American politics, the bleeding guts of nearly every policy proposal. Simplifying the tax code has served as state-of-the-union boilerplate for presidents of both parties, yet somehow it doesn't get done even in times of unified government. That's because loopholes are the most underrated locus of political power. Politicians use the tax code to reward their friends, punish their enemies and cut deals with their colleagues. The complexity of the tax code gives them cover to do that without most Americans noticing what's going on. This creates a silent, extremely potent constituency for opacity, complexity and an ever-growing body of highly specific rules. When Congress opens loopholes, it's typically with the intention of shoving Americans right through them. The generous mortgage deduction is intended to increase home ownership. Bumping up the child tax credit is supposed to make more American babies. Cutting the capital gains tax shoves money into the stock market. Anytime you do something to minimize your tax bill, you're doing what a politician wanted. Even political fights that don't look like tax battles on the surface often quickly become the business of the Internal Revenue Service. During Prohibition, the ban on the production of alcohol was initially enforced by agents of the Treasury Department, revenuers, they were called. The bill of impeachment against Richard Nixon, cited as alleged efforts to cause income tax audits or other income tax investigations to be initiated or conducted in a discriminatory manner. And in 2012, the Supreme Court saved the Affordable Care Act by ruling that the penalty for not carrying insurance was actually a tax. All of that means that when it comes time for Republicans to make good on their years of promises about tax reform, they freeze up. Because they like being able to manipulate people, institutions, and industries via the tax code. This is not